Welcome back. We have Janae Adams with Debt Sucks University, Nathan Grant with MoneyTips.com. They're here talking about spending and talking about saving. We want you to text your financial question to the number that's on the screen right there, 336-379-5775. I know a lot of times people don't want to text in a question because they think someone's going to know that I asked that question. Absolutely anonymous. So when you text it in, all I see is what you've texted. I don't see any names or numbers or anything like that. All right. So with that said, Janae, this person's asking, should I pay my house off? I'm able to do so and I'm 59.
I would definitely say yes. If you can pay your house off, that is what you definitely should do. I'm actually aggressively paying my house off because once you pay the house off, no interest is continuing to be on there. So let's say you had $10,000 left for your house. If you let it go to its full term, guess what? You're actually paying more than the $10,000, so you're losing money. So I would definitely pay it off.
If you have the means to be able to do that.
Yeah.
Okay.
Definitely.
All right, Nathan, this person says, once we pay off that credit card, should we close the card so that we stop the annual fee?
Yeah, so everybody's financial situation is going to be different. So one person, this might not be the solution, but the other person it might be. But the one consideration is if it's worth it to pay that annual fee. Not every card has an annual fee to keep open. If it's a really high annual fee and you're worried about that and you can't offset it with rewards and stuff, then you might want to. But with any credit card closure, you're going to see a reflection on your credit reports and your credit score. So if you keep an account open, even after you pay it off, just put it away and don't use it. Put it in the drawer or something if you need to, and then you have it. But also your credit utilization is going to be lower because your credit utilization is how much of your overall available credit is being used. And once you pay off a credit card, that's going to lower that percentage quite a bit and really reflect well on your credit score.
Yeah, I think a lot of people think, oh, I paid it off, out it goes. And you're like, no, wait, that's going to hurt the credit score in case you want to do something else. Okay, good to know. All right, Janae, someone's asking, what are the pros and cons of refinancing a house or a car?
Well, right now, unfortunately, it's only cons, mainly because the Federal Reserve rate is going to stay high for a long time, but maybe through 2024. So if you end up refinancing and your rate is already low, your interest rate is low, it's going to be much higher. So it could have been, your house could have been at 3%. You refinance, it can go to 5, 6, or 7%, which means you're paying more money. So right now, unfortunately, it's no pros to it, only cons because of the interest rate.
Okay, I'm going to ask both of you this question because you have such different backgrounds that you might have different things to add in. Nathan, first, I have a credit card that was charged off because I got behind on my payments. All my other accounts are being paid off and are in good standing. Should I use one of the good credit cards to pay off the collections payments?
I think, again, this is one of those, like, looking at your interest rates on the card and what, it might be more beneficial to pay off one way than the other. In this, I think it's a little risky to use a credit card to pay off another debt unless it was like a balance transfer situation. So with a collections debt, I don't think that would be the best way to utilize your credit card. And, with credit cards, having that high interest rate, you're just adding another percentage on top of the balance that you're already trying to pay down. So I would say that's something you'd want to avoid.
Yeah, Janae, thoughts on that? Because you can pay the collections agency bit by bit by bit.
Yeah, you could, but it sounds like the damage is already done. They've already gotten it charged off, and it sounds like everything else is going well for this person because everything else has been paid. I would just move forward and just really start to build a great financial foundation going from here on.
Okay, but you have to still pay the collections agency, but don't put it on any other kind of credit card. Just pay it alone by itself.
Yeah.
Yeah.
All
right, someone else said, can your student loan forgiveness decrease your credit score?
No, it doesn't have anything to do with your credit score at all. And that if you get student loan forgiveness, that is the least of your worries about your credit score going down. Okay, you have just been freed of tens of thousands of dollars. You have a new lease on life. Like, don't worry about your credit score at all. Like, your student loans are gone.
Okay. Nathan, this person said, I was offered a 0 interest rate to transfer a high rate balance, but the higher rate credit card would not allow me to transfer the balance. Is that normal?
The one thing with balance transfers is you can't transfer a balance from one bank to the same bank or one lender to the same lender. It usually has to be from one organization to the other one to do the transfer. So that might have been one of the reasons. There might be some other stuff depending on the card that's on their terms of, like, how it is eligible for a transfer. But that's the most common one that I see is that they're trying to transfer a balance to a card from a bank they already have a card with.
Gotcha. Okay. We're going to take a quick break. We've got more of your questions coming up, but we're going to check that forecast.